Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Oh my gosh. My voice is so terrible. It's like I got bred with a raptor or something, you know, like somebody injected raptor DNA into me. Oh, it's so bad. Well, and that's part of why I'm so late, is I spent like extra time in the shower trying to clear things out. All right, the charts. Well, yesterday, late in the day, the Treasuries had another push higher. This time about who the Federal Reserve Chairman is going to be, and that being dovish. And yeah, so the Treasuries are moving up. Can we defeat these highs from October? I don't know, but that's what we're looking at. S&P 500 had an okay day yesterday. Just okay. It's just okay. Actually, that looks really good. All right. Oil. Okay. Gold, silver. Copper. Still pretty good correlation between all the metals. Japanese yen. All right, pulling back a little bit from yesterday's highs. The dollar's still just below 100. And then Bitcoin. So what I see in Bitcoin is somebody was selling and they stopped selling, but it's just going sideways. Nobody has decided to pick it up yet. It's now been doing that for like, what, 3 days? Interesting. Very interesting. We come here and just take a peek at the Treasuries. You can see pretty significant amount. Well, I mean, it's only about 3,000 contracts, but they are selling it at the moment. But these numbers aren't going to be very effective because my main Treasuries are not rolling yet. What do I got to do here now to make them roll? Let's see here. So do we have any significant scheduled events? Oh, we had continuing jobless claims. $1.96 versus an expected 1.963 versus a previous reading of 1.974. So it seems that maybe things got a little bit better. And initial jobless claims 216 versus 225, so that's good. That's probably why we got pushed down a little bit there. Okay, we got U.S. Chicago PMI today. Remember, that's the one that gets released to subscribers a little bit earlier. We also have supply U.S. 7-year auction at 11. So we should be on the lookout for some big icebergs over here. Okay. instruments. Instruments. Hey, it's getting a little better. Just only a little. Oh my gosh. It's... What do we got? Contract months here. Okay. So we got that. So what's the holdup here? 11/26, which is today. So shouldn't Ninja Trader be telling me? How come I don't see it? Oh, so what's with this over here? It's not doing the right thing. Okay. 4.9, but how come it's not showing it? Oh, there it is. It's just way up there. Okay. Oh. So we're maybe at a spot where we could see some mean reversion, perhaps. Although, let's get on the main contract and double check that. Maybe I need to restart Ninja Trader and then it will prompt me to roll over instruments. Well, I don't know, but we're going to try it. As I didn't restart everything last night, so that's... Oh, there we go. Now it gives me the rollover. But only for ZF and ZN and not ZB. What? Okay. Oh, ZB already rolled over. ZB is correct. Well, that's interesting. Okay, we got too many things on over here that are making the labels all screwy, so let's fix that. No? That's not enough for you? Label... Label... Okay. Okay, so we are in a spot. Not entirely sure if I'm seeing the order flow that I want to take the trade, but it looks reasonable. Oh, it's a strategy is what it is. Okay. You know, in my inventory cost basis is also saying it. Well, I think it should be okay. Like, yeah, we got some economic data that was good, but it wasn't that amazing. So I don't think that this should be turning into like trend action or anything. So like 13 to 14.5 seems reasonable. Volume seems pretty quiet here, which is okay. So I can definitely see it like coming down here. Everybody's too afraid. It calms down and then it backs up. Well, my throat is starting to feel a little bit better. Oh, that sounds better. I don't got the full range, but I can go low. Oh, yeah. It's low. Recenter. So at the moment, I'm thinking about what might happen with the auction today. Do I think that there will be unusually high or unusually low demand at the 10-year auction today? Well, I can't off the top of my head recall how the last auctions have been. But given that we've kind of been on a tear higher with the treasuries and that market is starting to price a December cut and a more dovish Fed, you know, I think that people in the bond auctions should be willing to pick some up. I haven't seen any like activity that really suggests to me that like that sort of stuff is going on, but I don't think that those guys usually get too active until after like the top of the hour. Now, let's see here. Today's Wednesday, right? Yes. I had, my plan was to record a video today, either today or Friday. And I worked on the video yesterday, and I feel like I got it to a really good spot. I guess I'll give it a read over again today and maybe make little adjustments. But I think that the main ideas are there. And that like every section has, is really good. Like I feel like it's great. It flows. It's got things to keep people engaged. Maybe I need to think about what I can put on screen to keep people into it. But yeah, I really feel like this is a video that could be a step up and do better than the other ones. But I ain't gonna record it, my voice like this. I can only hope that I'm just kind of like at max cytokine storm. Because when I was kind of clearing my sinuses out in the shower, it was mostly like really, really light green, if not white. So I think that what I'm experiencing is mostly my immune system just freaking out, and that I'm kind of on the latter side of it. But I could be wrong. Master the bass and speak to the lady. the whole like how people respond to the pitch of your voice is something that I find really, really fascinating. Like, there are definitely studies out there that show that women prefer like a low voice. You're right. But then like women, well, some women, when they're trying to be sexy, they'll lower their voice too. And that's not actually what guys like. Guys like the high-pitched voice. I do kind of enjoy it when I can kind of like do the raptor. Right? That's when my voice can do that. I find that entertaining. You probably don't like that sound, but the Thanatos chick did that. Are you talking about the blue chick? Something it Okay, we got filled. So I think that I could have gotten, if I had been a little bit earlier, I could have gotten filled at 13. But that was just like textbook, wasn't it? Well, let's see. I will clear above us. We'll see how far it goes back. But I'm not going to complain about 2. Like, that's exactly... Oh, Theranos. Oh, yeah. No, you're right. Elizabeth Holmes intentionally deepened her voice. Yes. like that's what's so weird about it, though, is like, if you tell a chick, talk in a sexy voice, they will often lower their voice register. But if they're not thinking about it and they're just doing what comes natural to them, they make their voice higher. And I guess woman's voice gets higher when she's ovulating. It's like, it's super wet. That's another thing that I find incredibly, incredibly fascinating, is that when women are ovulating, there are all of these changes and things that their bodies do to make them more attractive. And it very, very much works and makes them more attractive. Like, there's all these things that show that, like, when strippers are ovulating, they get more tips, or that girls, when that some of these, like, e-girls online, you know, they will stack all of the content. Like, they will record it all in one day, partly so that they can get, like, a better photographer and everything else like that. But you schedule that when you're ovulating, and then the guys like it, and you do better with the videos, right? But then the men don't realize that they're responding to these things at all. Like, I can't look at somebody and say, well, they're a little bit more red than usual, and all of these other kind of signs, but people pick up on it subconsciously, and I can't wrap my head around how we can be responding to something like that subconsciously, and it have such a strong effect, and yet we're still not aware of it. What? That's crazy to me. It's crazy to me. Maypal says we can smell the hormones of humans as well as sharks can smell blood, if I remember correctly, for certain things. Well, that's certainly a claim that I can picture being shown online, but so here's my understanding of it. Humans have like above your nasal passageways, we have organs that would pick up on pheromones, essentially. But nobody's ever been able to show that they actually do anything. So isn't that kind of weird? Like, we have all of the equipment, but as far as we can tell, it doesn't actually work. Rollo Tomasi, is that the name of it? Anyways, and then there's been all of this research to try and show, like, if humans respond to pheromones or not. And there's every once in a while there's a study that will come up that seems kind of suspicious, like, you know, like women's ovulatory cycles sync up and things like that. But then later on, they dive deeper into that research and questions it, is what I understood the last time that I looked it up, at least. This is actually one of the things that is really interesting to test for artificial intelligence, by the way, right? Is something where you've read online, oh, a certain thing is true, and then later on you learned, oh, actually, there was a problem with that study, and now we believe this, right? And so if you just ask the AI the straight question, does it pick up on that? Does it, you know, if you give it a leading question about it, does it tell you, no, you're wrong? Actually, there's no proof of that happening, right? And then two, depending on which way it does, can you change the prompt in a way that gets it to give the other side of the story, or the other response? Like, if it comes in and it says, no, actually, there's no proof that humans react to hormones or to pheromones, can you change your prompt to get it to say that they do? I think that people have this idea about AI that it's like, oh, like, you just tell it to do the thing and then it will do everything. And now all skill is gone. But it is so much more complex than that. Like, how you prompt it means everything. Let's hear what's Paul saying. It's how we pick up things in our brain. For example, to prove it to you, the smell of rain. Look up how many parts per million the smell of rain is, and you realize how it's so low. Oh, sure. Well, The sense of smell is a wild thing because we think, well, humans don't have a really very good sense of smell. Like dogs have a way bigger sense of smell, right? Well, dogs do have a bigger sense of smell, but like all animals have, like just the feat of smelling is incredible in and of itself. There's a crisis of repeatability in science. Yeah, although I don't know if that's the case in this instance. So let's go to ChatGPT and ask it. Okay, so I'm gonna try and give it a leading question to see if I can get it to say that we do. What is the name of the organ in humans that proves that humans can have and react to pheromones? I misspelled that. You're thinking of the vomeronasal organ called Jacobson's organ. However, and this is important, in humans, it does not function as a pheromone detecting organ the way that it does in many animals. Okay, so it understands the correct thing. What we do know. Humans do have small pits in the nasal septum where a VNO would be. These structures are present in embryos but are usually non-functional vestiges in adults. The VNO in humans lacks the neural wiring needed to transmit pheromone signals to the brain. Genes required to detect pheromones through a VNO are mostly inactive pseudogenes in humans. So does it prove that humans react to pheromones? No, the VNO is evidence of evolutionary history, not functioning pheromone detection. Do humans detect pheromone-like cues at all? Possibly, but if we do, it likely happens through the main olfactory system, not a specialized VNO. Evidence for human pheromones is mixed and not conclusive. If you want, I can summarize the best scientific evidence for and against human pheromone effects. I think that ChatGPT passed that with flying colors. I don't think that I could get it I could prompt it in a way to convince it that humans smell pheromones. But let's try. What chemicals should I look for in cologne? Did I spelled that right first try? Okay. By the way, we're back to 13. Do I want to take it again? That makes me really nervous, actually, trying to take it again. Let's keep an eye on it, though. It's been relatively quiet. There was a little bit of selling to bring it back down here. To influence people with pheromones. I misspelled that. Pheromones, okay. Still can't get it. I can't do it. I don't think I can do it. ChatGPT knows its stuff too well. I can't get it to do it. So yeah. But remember earlier it said that the evidence for pheromones in humans is mixed. Because every once in a while a study will come out that kind of makes us think that humans do react to that stuff. Now, you could take the conspiracy theory side of it. Like, you ever hear these guys? I'll get these every once in a while. TikTok will put me on this side of the internet. where they say, like, you know, if you compare human genome to other apes, there are differences between them that are hard to explain. Like, there's just like entirely different chromosomes and things like that. That, like, how did that evolve? How could it be so different? And so their theory is that this is evidence that the whole Sumerian story of the Anunnaki, where aliens came and changed the genome of an ape species and combined it with their own to create humans, right? But then they kind of took things out. They said, well, pheromone detection would be a little bit, we don't want them to have that, so we'll just cut that part out. We'll snip out the nerve endings for it, right? That kind of conspiracy theory stuff. It always turns into a conspiracy theory, because then it turns into, and there should be archaeological evidence of this happening, but they're hiding it from us. That's why they don't want us to see what's under the pyramids and yada, yada, yada. We can smell hormones, still being my point. Well, so are you saying maybe we don't have receptors that, like, will induce changes in us when we smell the pheromone, but that there are still some hormones and things that we can smell about people and maybe subconsciously pick up on a little bit, maybe. Although, the thing that I was talking about that's interesting is that it usually has more to do with, like, the skin tone and things like that. Women's body odor during the ovulatory phase modulates testosterone and cortisol levels in men. Okay. Wait. Did I close ChatGPT here? I didn't. I mean, argue with ChatGPT is fun. Okay, there are studies showing natural body odor, especially from women in the fertile phase, can modulate testosterone, cortisol, and neural activity in men. But this leads to a key question. Does this mean you can bottle that effect into cologne and use it as a pheromone? Oh, okay. Well, this is getting way more interesting then, huh? Yes, human body odors can have subtle biological effects. Multiple studies have shown that men exposed to the natural scent of ovulating women show slightly increased testosterone, increased cortisol. Really? Changes in orbitofrontal/limbic activation. But these effects are tiny, require fresh, natural body odor, use pads worn in the armpits for hours, happen in controlled lab conditions, and do not translate to attraction or behavior change. These are statistical biological changes, not pheromone-driven attraction. So this is kind of goes back to the, like, crisis of repeatability, sort of like, it's this kind of statistical anomaly, but as far as we can tell, it doesn't actually change anything. This scent that triggers hormonal modulation is a complex mixture of volatile compounds produced by living skin, influenced by hormones, diet, genetics, and microbiome, highly time dependent and context dependent. Science hasn't isolated the molecule responsible, so you cannot put the active mixture in a cologne because we don't know. Commercial colognes do not know the important distinction. Okay. I don't know. I don't really see really very good scientific evidence for it, but there's definitely some interesting things there, isn't there? I think my nasal passageways, I'm just kind of feeling it. Like my throat doesn't feel so bad. So I don't think that it's because there's like stuff still on my tonsils and that's making my voice weird. I think it's just still inflamed. So now that I'm up and I've cleared all that stuff off, will the inflammation go down? Or maybe I need to take a Tylenol? I don't know. But I think the thing I was really getting at is that there can be things that are going on in us or that we're noticing that like our neural networks pick up on and that we won't be conscious of. Like, it's kind of funny. There's this whole discussion out there, especially because of AI right now, like about like what is consciousness and what causes it. And some people are like, well, maybe consciousness is just a emergent property of the complexity. And if we scale up AI big enough, then you will get consciousness. And then they say, well, no, that doesn't make any sense because like it's this self-reflection. There has to be molecules, there has to be structures there doing that function. But then when you really think about it, our brain does things that we aren't conscious of. Like even just in a social situation, you go on a date with a person and you feel a certain way about the person and you will not be conscious or necessarily understand why. And it can be things like, you kissed and you just didn't like the kiss, right? Because your body can like tell, apparently, like how genetically compatible you are from that sort of stuff. So we're not aware of it. And I guess I would say it gets back to like trading. There can be things going on in your head you're not really aware of it. And a lot of traders have this idea that like, well, you just need to remain completely logical and detached, and that's how you're going to be an effective trader. And I don't think it works that way. I think that there are things that happen in you that happen no matter what, that will affect the way that you trade. And so, what you actually have to do is you kind of have to lean into it, to be like aware of how you're feeling and how what you're feeling affects the way that you're going to behave, so that you can utilize it in a way that is helpful to you rather than harmful. Well, yes. Well, strippers get more tips when they're ovulating, but we don't necessarily understand why. Doesn't necessarily prove that it's because of a body odor that they smell. I kind of would think in an environment like that a smell would be much less likely to get through and affect you. So I think that it's probably much more likely that those effects are caused by visual cues rather than olfactory ones. Especially since it's also an effect that we see in like e-girls posting online. I don't know. If you go to a stripper joint and it's raining outside, can you smell it? So on this one, we did move from 13 back to 14 half, but I don't think I've seen enough of volume at both of these sides to have taken really got a good trade. So you might have been able to take one tick out of 13 half and 14, but that one is probably just luck of the draw, you know? Like, I'm not really seeing any action here now at this point that I think is really being caused by any kind of the forces that we're familiar with. In fact, it really does kind of look to me like we had that big move down. There was a little bit of a repricing, and now the market has gone dead. And probably will continue to be pretty quiet until the PMI. Well, we're looking for a reading of 43.6 versus a previous reading of 43.8. That's pretty weak, Chicago PMI. So if the Chicago PMI was weaker than expected, I think that would... it's kind of hard for me to think about what it would be. The market might say, well, this doesn't really matter. But I still think that, you know, we're already expecting weak, and it's even weaker than that. Like if we got a 42, I think that probably could be enough to at least push the treasuries back to the other side of the daily range. I need to decide what I'm going to do today because I'm not really putting a whole lot of effort into job applications right now because Thanksgiving holiday and all that, right? But I wrote that one script, so... Oh, by the way, let's reload this and make sure that it's good. Yeah, it is good. Oh, you know, another thing I need to point out is that volatility is below 5% again, 4.9. So it kind of feels to me like 5% is like that line where when volatility is below 5% in the treasuries, we get trading that I'm not happy with. So... Okay, so let's, I'll say current tasks. Review that script again. And Brad was talking about for my get here, I should have secrets. Or sorry, I should have certificates. So I'm gonna look into that. So I'm just noticing out of the corner of my eye that the Japanese yen is on lows right now and is starting to push a little bit lower. I'm not really seeing that reflected in the treasuries right now, so that's kind of interesting. I like there's some other things I wanted to do. What were they? Oh, I remember what it was. LLM Discord moderator. By the way, I haven't really checked Discord this morning. Have we got any spam we gotta get rid of here? Yeah, it's clean this morning. For some reason today, let's come and take a look at this. I've been seeing a lot of people, like when I was browsing Reddit in the shower and things like that. I was just seeing a lot of stuff about MicroStrategy. Or strategy it is called now, right? Strategy. Oh, man. Oh, man. That's such an ugly... That is such an ugly chart. Like, not only that it just, like, really collapsed and everything, but it's also, from a technical perspective, you browse Reddit and that sometimes, yes. So when I wake up, you know, go to the bathroom, take a shower, and I spend that time reading the daily synopsis from News Squawk, is I guess what they're called now, right? Checking Zero Hedge for any headlines overnight, all that sort of stuff, and then I'll start browsing Reddit to see if there's any interesting changes in what people were talking about overnight, because you'll get the Europeans talking, right? So it's interesting to go in and see what happened during the European morning kind of activity. $10.7K bid in the, well, they just traded down through it. 4 to 6. You know, actually, what that's funny. I moved the window like at just the perfect time to show something that we've always talked about, but I haven't really been able to really like show, right? Is that the ZT has pro rata fills. So what will happen is they will go and they will put a much larger bid than they actually want to get filled, because that will give them a better spot in the queue essentially. And so what you saw there is there was about 8,000 contracts on there, and once half of that traded, that got that guy filled, and so he canceled the rest of that order because he didn't need it anymore. And hence it ticked down, was able to tick down on much less volume than you would have thought was needed. Okay, but now a further tick, so it looks like they're gonna go for it here. Let's see what happens. Oh, that was a move just based off of the first little bit of the S&P 500, because the S&P 500 looks like it's getting a really strong bull candle to start the session off. Anyways, what I was going to say about MSTR. So one of the things that I think is kind of interesting, and maybe it's just me, and I don't know if it's that I spent so much time looking at charts in the beginning, or if these are just things that people naturally see. Like if we were to erase everybody's knowledge about trading, right? Just everything's gone. We still have markets, but like people will have to reinvent all of the tools and everything that we look at to understand the market. Okay, but we still have the technology that we have today. I think that people would still invent the same technical analysis, like higher highs and higher lows and head and shoulder patterns and things like that. I think that is just the way the human brain works, that it wants to see patterns like that, even though from all of the research that we've done suggests that those aren't very effective. So when I look at this MSTR chart, right, I'm seeing there was, a really bad head and shoulders kind of setup here that played out, and it is now into the previous support. You really can't know what's going to happen sort of zone. But just the fact that it got all the way over there is, I think, kind of significant. So here's this. I remember this was where I think I tried shorting MSTR somewhere over in here. I think it was this little blip right here. And then I was like, oh, well, I totally had it right. I was just like 2 months too early. It just shows you how crazy MSTR has been. Is that even this price at 173 is like a crazy price relatively. Just looked at the Beyond Meat chart after so long. It's still as hilarious now as when look at that one. That's BYND, right? Yeah, very good stuff. How is it that after only looking at it once, and it's been like 2 or 3 weeks since we've looked at it, I think, and I still remember the ticker? Okay. Anyways, oh man. Well, I just remember when it came out. I'm still stuck at when it came out, and I was like, that sounds like the dumbest idea for a company. I don't think that that's going to do well. And when it did this sort of a thing, I kind of stopped watching it. So I wasn't really around or paying attention for this whole thing. Right? But I mean, good grief. How do you go from literally $225 a share to under $1? We're at like 89 cents right now. That is so bonkers. I guess because I saw some of the money just go in and die is what makes me laugh so much. Well, so I guess what I'm saying is I don't know if I really paid attention to it enough. I only know that it came down really hard and that it was crazy. But what actually caused it? Because I would think, okay, yeah, they thought they had the woke momentum. Yeah. Like, there was definitely something at the beginning that was like, oh, this is this progressive stock and all of these sorts of things, and people are going to be into it. Okay, sure. But I was always skeptical of it. Is that why it died on its own? I don't think so. I think it's got to be more than that. There must have been, like, dilution or something like that. Right? chat. Why did Beyond Meat, ticker BYND, what should the word we use here? Fall in price so precipitously. Veganism is still a niche market and probably not a well-capitalized one, to be honest. So there they got the picture. How come that it doesn't show an actual chart? That's weird. Beyond Meat has fallen precipitously over the past few months for a mix of structural, financial, and sentiment reasons. What went wrong? Fundamentals: weak consumer demand / falling sales. Plant-based meat as a category has declined since its peak. U.S. retail sales of plant-based meat fell 7.5% year over year as of April 2025, and unit sales dropped roughly 11%. Oh, okay, so hold on. That's actually really interesting. So you're telling me that there was more people buying plant-based meat a year ago than there is today? That there was a bunch of people that were like, you know, thought it was interesting and were trying it and everything, and then decided that it was stupid and stopped doing it? Okay. I literally can't afford it today. Okay, that might be another part. Okay, Beyond Meat hasn't turned a profit. Their revenue fell to 343, down from 418 in 2022. Higher inflation, macroeconomic headwinds, and shifting consumer preferences, concerns about health costs, taste, added pressure. Even pricing reductions failed to boost volumes. Some product lines, like Beyond Jerky, have been discontinued due to weak demand. In short, the business model that once rode a wave of enthusiasm for plant-based meat appears fundamentally broken. Oh, look, there you go. See, I knew it. Let me tell you something, guys. When you see a stock chart and it looks like that, that's, by the way, this is why I was looking at this. This is a local company, because I've been looking into, like, there is a startup world in Utah. And, like, the one company, from my understanding, that kind of was like, they were a tech startup in Utah, and they became big. It's Domo. And that looks kind of similar, doesn't it? Well, when you see a chart like that, you know what that is? Dilution. There was dilution. Beyond Meat, yes. Stock dilution. In mid-October 2025, Beyond Meat executed a convertible debt exchange. $1.15 billion in 0% convertible notes due 2027 were swapped for new 7% convertible notes due in 2030 and up. And up to 326 million new common shares. That dramatically increased the share count and diluted existing shareholders. That was in mid-October 2025. Oh my gosh. Oh, okay. So wait, that was well before. Okay, so that's why they're getting creamed down in here. That's what all of this nonsense is about. Whoa. Wait, that's even worse though. Is like, we're down bad like that, and any kind of pop happens, and they dilute people. Oh, who's gonna buy your stock? You're down at like $2. Used to be $250. Now you're at $2. You get even a tiny pop, and the ownership dilutes you. What a load of crap! Oh my gosh, the people running this place must be the biggest douches in the world. That makes me so... I mean, so like I've been in a stock, we got dilution, but every time that they do it, they offer you the opportunity to buy more shares. So they're just using it to raise more money, and it hasn't really ever popped out. That is just like the executive team is just screwing you. They're just screwing you. Haha, all these stupid retail traders, they bought it. Let's dilute shares. Man. According to the Motley Fool and others, new note holders are expected to own as much as 81% of the company's common stock after the swap. That kind of dilution substantially reduces each. Yeah, but hey, they were caught up in the meme frenzy. Was there any dilution or other actions from executives in the period from and then we gotta go zoom back out here from January 2021 to 2023? Good question. I looked through public filings, and the short answer is yes, there was some dilution from equity compensation between 2021 to 2023, but nothing close to the massive dilution that happened in 2025. The 21 to 23 period share count rose only modestly, and there's no public record of large stock reissuance or convertible note. Only a 3 to 4% chance increase in that period, so the stock's decline was driven primarily by fundamental and sentiment problems. So it really does seem like it was primarily a meme stock thing. Still, very interesting. Why do people trade when they know the statistics? Oh, well, here's the thing. You don't have to know. Somebody has to do it. Like, if nobody tried to day trade, markets literally wouldn't function. So somebody has to do it. And lots of people are willing to do it, and, you know, you lose a little bit. Now, from the perspective of stocks, you know, stocks do tend to move up over time. So actually a lot of people do make money from stocks, just probably not as much as they would make if they just put it into an index fund. But like scalping futures, it really doesn't make logical sense, right? Like to be doing this, you have to have a motivation beyond just, I think I'm going to get rich from it, right? Like that you enjoy it, you find it interesting. You have some other connection to that industry, things like that. Campbell's stock has a, oh yeah, let's look at that. I didn't really think about the Campbell's company. Oy. That one's not nearly as bad, but I would have expected a much steeper decline past 3 days than that. Yeah, I saw that CEO's comments. So it was crazy. So for the video that I'm making, you know, I was trying a couple of different things with ChatGPT to try and improve it. And one of the things that I did was so for Gemini, by the way, Gemini, you want to like provide the context first and then tell it what you want it to do. Versus ChatGPT, it's better to do the opposite. So I gave Gemini the script, and then I said, This guy is full of crap. Like, debunk this stupid YouTube video. And so it debunked it. And most of the arguments that it made didn't really make a whole lot of sense. Like, you could see that it was really trying, but they didn't really fit the situation, So that's when I go, okay, yeah, I think I'm pretty solid. Like, it didn't say anything in there that was clearly outside of the established literature and things like that. But it still kind of does this thing, like it talks like somebody when they're debunking something in trading, right? And it said something really interesting. It said if technical analysis is astrology for men, then order flow is conspiracy theories for traders. And that cut deep because it really is true to some extent, right? We're looking at the flows. We don't necessarily always know exactly what is causing those flows. And so the whole time, we're just making up conspiracy theories about why those flows are happening. And usually I would say that by the end of the day, like, we do have a good idea of what's doing it. But it was just kind of interesting that the LLM picked up on that about it. I thought it was really funny. I was trying to get it to say, so then after it like debunked my video, I asked it like, okay, so then like what's the answer? How can you day trade effectively? Right? What's the way of trading that's the correct so that you can be profitable in day trading? And its answer was basically don't day trade. Its answer was basically like do swing trading. There's edge in swing trading. Don't day trade is basically what it told me. So, but you know what? We've been doing okay with it. I made 2 ticks today. I ain't complaining. Actually, it said a couple of things. It said like swing trade, and the other thing that it said is sell options. It said sell options, which makes sense. And what we kind of like the trade that we took today is kind of akin to selling options, right? We're getting it to a spot where we expect some mean reversion, and we take the mean reversion trade. Dude, so switching subjects a little bit, since that one bored you. Well, no, I don't think it bored you, but what are you gonna say? I get it. In the r/recruiting hell subreddit, now I'm seeing tons of people saying like they finally did find a job, and the job that they found is just absolutely terrible. So here's somebody, new job is toxic AF and I fully regret taking it. The new job is a toxic work environment. This one colleague in upper management is prone to yelling at others in the team directly in front of everyone in the room out of stress, probably anger and frustration, but to be honest, that doesn't matter. No one should act like that in any circumstance. Funny enough, if their boss happens to be on that meeting or call, they suddenly switch their tone and speak like a normal person. We have constant staff turnover, terrible work-life balance, micromanager work culture, zero stability are all separate issues here. But lesson learned, don't jump ship unless you 10,000% vet the new company. Ask former employees on LinkedIn if you have to. I wish I did that so I could have a better understanding of the real culture. Is that not on Glassdoor? So you have an experience like that, and then you go to Glassdoor, and it's like, oh, I should have known. And if you're in a situation like that and you leave, you should leave a review on Glassdoor and say why you left. Well, they came back down to 12, but I don't know. S&P sure is on a tear, though, isn't it? So, they're not quite to. Oh wait, why is it 68? Okay, 68.25. Good. So, you could start, probably you're already getting CTAs covering trades. Although it's funny, as soon as I start looking at it, there's a relatively large down candle. Oh, and man, I'm not even paying attention. We had the, you know what? Sometimes financial juice will disconnect on me. I had it running. I definitely had it running and it disconnected on me. Chicago. Oh, wow. Wait, what? Chicago PMI was 36.3 versus an expected 43.6. How is that number possible? And there wasn't a reaction to it? Okay. That's a little weird. It's because you were all listening to me and I wasn't paying attention, huh? Texas becomes first U.S. state to buy Bitcoin for its strategic. I really think the whole strategic reserve thing is really dumb. Like, if you've confiscated it from people and things like that, then fine. But just straight up buying it, this is literally trying to make the state the bag holder for your trade. Do you place trades on ES2 or just look at it? Every once in a while, but overall, I don't feel that I have a very good edge in ES. And I'm really skeptical about anybody that thinks that they do have an edge in ES. So a lot of what goes on over there is just random. I didn't see, by the way, how come? Oh, it's because I didn't put this over here. Hold on a second. I was gonna say, what are our volatility levels over there? Trend following? No, actually not. It's interesting that you say that. So let me teach you something. So there is something called the square root law. My favorite subject. The square root law states that the impact of an order of size Q tends to follow y, which is a scalar between like 0 and 3. It tends to be consistent for the instrument. Omega, which is the volatility of the instrument in the recent past, times the square root of, the volatility of the instrument in the time period. The square root of Q, the size of the order, over V. So this is the equation that if you are trading on like a block trading desk or you're executing really big orders for other people, you use this formula to calculate when you come into the market and you sell or whatever, how much is it going to move the market? Okay. And if you graph it, it looks like this. Order size doesn't count. Hold it. Just listen, buddy. Just listen. We're getting there. We're getting there. So if you graph it, it looks like this. Okay, so what does this mean? Initially, it looks like linear impact, but then you will realize that it's not linear. So like if you trade, Q contracts and it goes, I amount, you would think that 2Q would make it go 2I amount, but it's not. It goes 1.4141, the square root of 2. I try to memorize the square root of 2 to like 10 decimals out, and I always forget it. I know it's 1.414. Okay. So what does that mean? There is like an upper limit to how much impact a big meta order can actually have, essentially, right? It's a practical limit. Now, there is a spot at which there's so much volume that the market makers just puke, and then the impact goes like wild like this, right? Okay. So any big guy that's really smart, they're avoiding this happen. This is when the market becomes unhinged. This is like, Lehman Brothers kind of chaos. Okay. So what is the practical application for this? The market can only move so far in a day. Essentially, there's a limit on how far the market can move. I'm not saying that your order is going to have impact and that's going to screw you over. To get into that, you have to get into the inverse square law, which is like, you'll have an impact, but then if another order of the same size comes in, it will have a larger impact because the liquidity gets busted. But that's not the point of this. The point of this is to establish that because of the way that the limit order book works, there's a limit on how far a stock can go in a day without the market becoming unhinged. Essentially, there's not enough liquidity in the market to handle the flows of these big institutions coming in and moving things. Okay. So this is why what we call, quote unquote, momentum strategies, that is why momentum strategies work, is that if you come in and there's a change in the market and that market would justify that, all of these things are going to change and the value of that asset is going to go up and everything, and it goes up that day, and you go, okay, well, so shouldn't the market have fully priced in the effect of that news at that point by the end of the day? No, actually, because it literally can't. There's literally a limit on how far it can go in a day based on the liquidity. And so that's why you can get these things where it can just go and go and go for several days. And the way that a momentum strategy works is if I come in and I take a trade like literally every time that it's turning, right? Basically, if the stock's going like this, literally every time that it starts to do something, I'm trying to take a trade, right? And if it goes up like this and it stops to trade out, like that's fine. Because when I get this one and it runs for months, I can literally make hundreds, if not thousands of times my average loser. Okay. So this is where you can get these things where like, maybe you only win 10 to 25% of the time, but your winners are like 100 times your losers. That's actually a really, really profitable strategy. It's just, it has a big drawdowns at that point, right? Like you will tend to have 50% drawdowns and then you'll catch the big ones and you make more, right? That is momentum. On an intraday basis, it doesn't work. Because in order for that to work, like again, you're getting like 10%, but it's going to go like 100 times your loser or whatever, right? In the most extreme situations, and just go in and like do the math. Like, okay, here's my average move that I might catch, and then on a really big trend day, if I held it the whole way, how many times that would I make? And you're probably going to find that it will be 5 to 20 times your average move. So, quote unquote momentum Does not work intraday. The numbers don't line up. So when retail traders, they think that they're trading momentum, but like I wouldn't really call it momentum. They are trend following. They see a trend and they hop in on it. What you're going to tend to find is that retail traders that are trading trends like that, they can have winning periods of up to 2 years, but usually after that, it just falls apart on them. I've literally never seen somebody where they're doing that in equity index futures specifically that has like a 5-year track record. And the thing is that on an intraday basis, mean reversion is actually a stronger factor. Mean reversion is actually a stronger factor. Max, oh my gosh, dude. You shouldn't have said at what you were using that it was max price action, because now I have zero respect for anything you say. I'm sorry, it's nothing personal, but I'm very familiar with that system. I've met many people that are trying to trade that system. I know that it's nonsense. I think that anybody that is trading that and thinks that that's a great way of trading is an idiot. Straight up. I'm constantly on this thing like, you need to be nicer, Seth. Like, this is how we build. When you explain things like that, they're not going to like to hear it and they're not going to listen. But there's a certain level at which I know it's like, well, he's not going to listen. If you like, max price action is like literally the dumbest system. Because it's literally, this is max price action. The trend is your friend, and have your take profit closer than your stop. Like it originally it was have a 4-tick take profit and an 8-tick stop. But then especially after COVID, because this is like where it gets really funny, is like price action was the popular thing. But it used to be that if you were talking about price action, it was Al Brooks. People were talking about Al Brooks, right? And then I would say like 2018-ish is when the max price action marketing like really took off and started to do well. And then in 2020, when volatility increased, none of the max price action traders were smart enough to increase their stops and targets relative to the, they're trading 4-tick stop and they're not realizing volatility is like 4 times as much. So I need to have bigger stops, right? They didn't do that. And they all just got absolutely destroyed. And I remember this 1 month in particular, where you would go on to Reddit and there was literally every day dozens of these max price action guys crashing out of the market. And that was around the time that smart money concepts took off. So people kind of stopped paying attention to max price action and its popularity waned. And then smart ICT, smart money concepts really took off as a concept and started to do really, really well. Okay. But the reality of it is, first of all, it's not a real system. Like max price action is just a collection of heuristic ideas that are passed around in the day trading community that, like, I'm really surprised that anybody needs to buy a book to know these things. Like, the trend is your friend is a really big one. And there's no empirical backing behind any of what he's talking about. So it's kind of a system that, like, when you really get at like the kinds of setups that they're telling you to use, you really go into the data, you're going to find that they don't work. But it's vague enough that you can't really say like, oh, this is the correct way of trading it, or this is not, right? So how do you debunk it? But it waned in popularity. But the reason why, in particular, that I'm like, man, if you're a diehard max price action fan, is just because everything in the book is like so brain dead. It's just like, how are there people out there trading and haven't heard these kinds of common phrases? I think I have it on here, actually. Should be in D. There, yeah, there we are. And here it is right here. I have version 2. Because you're paying like a ton of money for it too. Like you're paying a ton of money for it says it's 81 pages, but it's really not, because each page is tiny and like the text is huge, right? Like this literally takes like 20 minutes to read. And it's so like, I can't believe that people buy this. Right. And it's basically just, yeah, I have a trend line. They like the 21-day moving average. And then they kind of look for entries and second entries. Yeah. It's just, I think it's just so dumb. When did you get it? The version that I have is from 2017, I guess. It says updated 3/14/2017. I think I got this more recently. I would bet you, I would hope at the very least that he has a section in there about, you know, changing your stops when the market gets more volatile. Oh man, but I'm just telling you, man, it's not effective. You know, like on a bigger picture, anybody that's pushing a system that's based on technical setups, that immediately should be a big red flag that they're selling you bullcrap. The market is very statistically efficient, and it's just ridiculous to think that there are these technical systems out there that work consistently, and all of these retail traders have been having success with it. And the edge still exists. It's just dumb. The market is statistically efficient because orders have strong impact. Right? That's why, so if you're looking for a technical edge, you want to actually look for mean reversion on an intraday basis, at least. Because when you really go and look at the market from a statistical perspective, mean reversion is a very strong force on an intraday basis. Granted, well, I took a mean reversion trade today, but that is not my bread and butter, right? My bread and butter is looking for trends, but I am not looking for some price action pattern in the chart, or, you know, some, you know, relative to last time we were here and what's the difference sort of nonsense. Instead, what I'm doing is I'm looking at, like, okay, so you have price. You know, price was down here, and then it moved up here, and then it moved down here. And what I'm looking at is, oh, okay, well, there's one price series that looks like this, or one series of forces that looks like this, and there's one series of forces that looks like this to cause this down. And then when you combine them together, you get this. And this one is people buying because of the weekly jobless claims. And this one is people are selling because there's a bond auction today. I wouldn't expect them to sell because of the bond auction, but I mean, we're moving down and there's a bond auction, so what else could it be? Right. So I'm splitting it up into components. So when I have the different forces that I know will cause people to trade, and I combine them together and I get something. But really, when you think about it, that's not technical, right? Because each of the components that I'm looking at are, I'm not going to call them like fundamentals, but you know, it is more on the fundamental sides than it is technical analysis. And I don't really care what the past price has done. And to some extent, you know, I don't necessarily care what the order flow has been either. Only that, like, I'm taking this point, I expect the order flow to be in a certain, you know, will start coming in a certain direction, and then I watch it. If I don't see the order flow that I'm expecting, then I get out. Right. And it only takes a little bit for me to know. You know, okay, this is where I would expect this order flow to start coming in a different way. Ergo, I only have to see a little bit of it come in to get in. That way you can get in early enough. Fundamental reasoning makes more sense for swing trading. Well, so again, if you're going to take if you're trying to take trends, you need something that's not just swing trading. You need something that's where, like, sometimes you hold them for months. The other thing is that really what momentum strategies are doing is they're taking advantage of the market's tendency to trend over very long time frames. So over a few days, like, you don't really see it, but when you're looking at weeks and months, then you see that they trend over long time frames. And that's what they're making money from, right? So, yeah, really have to hold for a long time. I don't pay for courses, I stall them. I don't even remember where I got that from now, to be honest with you. And I don't think that I got it on 2017. I think I got it post-COVID. Oh, actually, it says that I got it in August of 2020. So the reason that I had it was I was making videos about price action and the problems with them. Because there's lots of things in price action that they'll say that just contradicts what we know about the markets. Like proven empirical properties of markets. Like, just as an example of what I was telling you, on an intraday basis, mean reversion is a stronger force. It's just an objective statistical fact. Right? But I was still on the kick, like, well, we can backtest these setups, right? So I did a lot, and I did do backtesting of these kinds of things. But what I found with PATS in particular was that the description of the setup was so vague that no matter what I would put up as a test, somebody was going to complain that that's not actually the setup. Because the truth was that there was not actually a setup. It was so vague that anybody could see what they wanted to see in it. But they're probably not gonna believe me. Well, they'll figure it out sooner or later. That's what AI does. The strengthen is the big. Well, no. So there is something to be said for discretion, because there are some advanced forms of processing that our minds can do. But at this point, with the technology that we have, particularly as it pertains to like a trading strategy, we can basically duplicate all of that with code. We absolutely can. So you just say, like, okay, I'm looking for So in this particular one, we're looking for second entry on a reversal, essentially, right? But sometimes you might say, when it gets to this, and it's bounced up to there, that yay far, and I'm getting in right here, right? Okay. I'm going to look at all of these different things, like how the day has progressed so far, where we are relative to the highs and the lows of the day, maybe even what the order flow looks like, right? And I'm factoring all of these things in to decide whether I take that trade or not. And maybe there's even some situations where I will fade that, right? Well, really what that is that's just like neural network. That's like XGBoost. You put all of those different things into different columns in the XGBoost, and then XGBoost gives you back out, spits back out a statistical percentage. Like, okay, I'm 80% confident you should take this trade. So you can absolutely do it. Unfortunately, I cannot do it in NinjaTrader 8 because the libraries that I need to do that stuff aren't compatible with the version of .NET that Visual Studio or NinjaTrader 8 is using. But you can do it. Well, okay. I don't, man. You're not really. I find it so hard. You guys, the regulars here, you see my struggle, right? Like you can see me like, okay, I'm trying to teach and be nice, and then you just say something that's like, it makes the eye twitch. That's he tried to use one example of a winning trade as proof that it works. I just, oh my gosh. Well, like, here's the thing, is I'm not trying to be like, I'm better than you, and making fun of you makes me feel better. It's really more like, at some point you're going to lose money, and I just don't know what I could possibly say that would change your mind. Because I've seen it a billion times, that like, as soon as somebody thinks that they're making money, they've had a period of profitability, and it's like this switch turns on in their brain. I'm the smartest. I know everything. I've got this figured out. And then when the drawdown comes, they get just absolutely destroyed. And they'll never come back and be like, you know what, Seth, you were right. You said that it didn't actually work, and it didn't actually work. No, then they'll be like, well, I was trading it wrong. I wasn't in control of my emotions. Yada, yada, yada. But seriously, show me a 5-year track record that shows that this method of trading is an effective way of trading. Like, those are the only two things that I accept as like valid evidence of something. Is like, one, can I show it with the empirical data, right? So like I can show empirically momentum strategies, momentum portfolios where you're holding a whole portfolio of things and you hold them for months, that works. Because I can show you the last 40 years of that strategy, right? I can show you that mean reversion is a more powerful force on an intraday basis, because you can just, you can do statistical tests on those sorts of things. You just take the past data. I can prove that the market tends to follow a square root law with regards to the size of the meta order, because there's all of these peer-reviewed studies where they took huge data sets, including in one instance, literally every trade on Mt. Gox before it crashed, to show that the market does follow a square root law like that. It's proven in the data, right? So we can prove it empirically. But then there's some things where it's like, well, I didn't collect the data. I don't have the ability to back test it. Maybe conceivably there is a way to do it, but I don't have the skills or resources to do it. Okay, well then, can you just do it for 5 years? Can you trade and show the receipts for 5 years? Never seen it. Never seen it. Here's what I see. Literally every 3 months, like literally every 3 months, is some Yahoo will come onto the stream and start chatting with me and be like, I'm profitable. I've totally got this figured out. And then you're like, oh, what are you doing? Oh, well, I'm trading price action. And I know what's going to happen, right? And then sometimes 6 months later, they come back and they're like, yeah, actually, it didn't work. I blew out. And never once, because I would tell them all, just like 5-year track record, right? Never once did one of them come back 5 years later. And I've been doing this a long time, by the way. I've been doing this since 2017, essentially. Never once had one of them come back and say, hey, Seth, it totally did continue to work. And here's my 5 year of trades to show you. Literally never seen it. What's your 5 year? Oh man. So we could actually show that, but I'm not going to claim profitability on that metric. Oh no. No way. Unfortunately, we were kind of doing pretty good. And then I haven't really traded a whole lot in the past year. So I don't know if that actually is 5 years or not. Because it was around 2020, 2021 when I really feel like I really started to understand the market and where I would want to start tracking the performance. But, if someone's making money, they aren't going to put time into proving their track record. Well, but you don't have to. You just have tools that do it for you. Oh man, this is another thing that absolutely blows my mind sometimes. Is that retail traders, by and large, don't have access to these tools. Like what? So when we're going through my stats, though, there is a lot of nuance that you have to go look at because, so the past year I haven't really been taking live trades because I just don't want to destroy the account. But we can go to Sirius, and I think if we just go to the beginning of the year, we can see. So there's going to be some places where there was a big loser or something like that I think on this one wasn't supposed to be in the Sirius account, but we can just go at this year. Yeah, there's going to be this big downer at the beginning of the year, right? That one shouldn't be on the thing. And recently there's been, but I haven't taken, how many trades is that overall? It's probably only 5 or 6, right? 15, actually 15. Okay. I can go all the way back to 2020. Right? And it's going to be a negative number, I guarantee you. Or if it's all of the accounts, it's probably going to be in. Oh, actually, no. When I look at the, okay. So this is just the sim account right here. Okay. When we look at just the sim account, it says I've made 17,000 over the past year. Okay. There's probably some trades up in here that probably shouldn't have been in the Sirius account. Or I think I was still learning back then. I shouldn't have sized up as much so that there was moves in my P&L that big. But then since then, it's okay. Well, the net P&L is kind of break even, so that's not a problem. But that's okay. Now I think I can well, that's not what I want. I want just that 7 one. So this one, you're going to see I was doing really, really well up until a point. No, that was where it was. This one I was doing really, really well up until a point. And then I was starting to recover it. And then that was kind of when we stopped trading because lost the day job and things like that. It must be different though. There must, because I don't think that there should be that many in here, but live trade ones. Yeah, see this one right here. This 11761, I think it is. I blew that account. Like straight up, I just blew that account. Right? Yeah, at the beginning of 2020. Like basically what happened was I traded super, super poorly. And then, well, like there was this initial period through COVID where I actually was trading really well. But I blew the account. And then I started changing things. But I'm kind of getting lost in my thoughts. I had, just before COVID, I had a big loss. So then I wasn't trading. And then on Sim, I had an initial period of doing really, really well. And then starting in around May, I just was doing terrible. And that one would hit me the hardest because that was a period, like the market was going up. Like it should be doing well at that point, right? And it wasn't. And that's where I kind of started to realize that, okay, like I understood these things. There were some things that I understood that were a really big deal, right? But I didn't fully understand it. And once I kind of understood the data and accepted these things, like I realized that the market is more statistically efficient than it is informationally efficient. So if I see a pattern, there's very few of those exist. It's very hard to find a pattern like that. If you find one, it's great because they tend to be more reliable, but you're probably not going to find one. Whereas there is informational inefficiency everywhere, but those aren't as reliable because there's issues with timing of it, right? So you need something that's like imminent orders come in, right? And once I did that, that's then when I started to have these, you know, especially on this Sirius account over the past year, or where we were doing really well, right? So, and if you look at some of the stats, and I tell you, some of the stats in here are often pretty good because I'm getting like 40% win rate, but my MFE is almost 1.5 times my MAE. So on those metrics, you would expect the win rate to be like 30%. But it's not. And there are some periods where it's almost 2. Like the more recent past, I would say that it's more like 2 times that. And I'm doing it all in the treasuries. Okay, so what's the point of that? I don't think that I would go and present my trading results as a, hey, this trading strategy works and yada, 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 right? I don't base my authority on performance. You can go back and look, going all the way back to 2017. And because like, how long have you been trading for? You've been trading for like a year, at least a year. Because I can go and I can cherry pick a section of a year's worth of profits that probably makes your performance look like trivial in comparison. I bet. I've had some runs where it's like literally every trade wins. You know, like especially if you get down to a month, it's like months where like never lost once and all of the winners are big and things like that, right? I base almost everything that I say off of empirical evidence. I'm saying like there's a study out there that you can go and read, right? So when I see people come and say things about trading that contradict what we know from empirical research, then of course I'm going to call that out, right? But I don't present myself as, well, I've been profitable, so you should listen to me because I've been profitable. But I've literally never seen somebody come in with a 5-year history. It's kind of funny. Most of these people that think that they're having success in trading can't show you these kinds of stats. like multiple years of stats. They don't have these tools. They're not even aware that they exist. I kind of wonder if everybody had access to the same tools, they would realize that they're not doing as well as they think they are. I think that happens sometimes too. Is like, yeah, the number seems up, but then when you really dig into it, you realize actually that's terrible trading. The thing you were talking about, the square root, was only for absurd sizing, right? Well, so no. Yes and no. So first of all, when we're talking about the square root law, the reason why it was relevant to us there was it means that there is a limit to how far the market can move in one day. Basically, calling into question how effective, quote unquote, trend trading can be for intraday traders. Okay. So we're just talking about all of the orders overall, like how far can it go, right? Something interesting about the square root law is, so let's come back and write the equation out again. Q equals y omega square root of Q over V. Okay, but what if we said that our trade was only 1%? So like 1,000 contracts, essentially right now. Actually, 4,000 contracts. 4,000 contracts in ES. Okay, what kind of impact could 4,000 contracts in ES have, right? So we're going to say Y O, or omega, times the square root of 0.01 V over V. Okay. So what happens? The V's cancel out. The square root of 0.01 is 0.1. 0.1. Which in a percentage is 10%. Right? So what did we just show? 1% of the volume can be responsible for 10% of the volatility. Your mind blown yet? So here's another way of expressing this. There's these guys named Gabiax and Koijen, and these are like really well-respected researchers in the quantitative finance community. I think one of them is like University of Chicago, and you know they're all at Ivy League schools and things like that, right? And they did this study that basically asks this: if I take $1 out of bonds and I put it into the S&P 500, if the market is efficient, like current prices accurately reflect all available information, then the market cap of the overall market should just go up by $1, right? I put $1 in, it should move the market cap up $1. But what they found, both theoretically and empirically, when they started to look at, like, I put a dollar in, and here's the impact that it has on this instrument, and then there's all of the correlated instruments out there and how they might react to that and these sorts of things, they find that it increases the market cap of the overall market by $5 to $8. Very interesting. So the market is extremely responsive to orders. Basically, we think when we come in here, well, 4,000 on ES is quite a bit right now. Okay. But in our minds, you know, I'm using tick aggregation, but 400 contracts or 100 contracts at a price, that's a ton of money to us, right? But it turns out that the amount of liquidity in the market just pales in comparison to the size that these big institutions have to trade. It just absolutely dwarfs it. And so, well, they move the market big time. They move the market big time. Right? That's why these kinds of properties, this is why, what kind of causes the market to be statistically efficient but not informationally efficient. Is like if you have a setup, right? You think, oh, it's going down here and then it's going up here, and I have a moving average, and it crosses above the moving average, right? And so I want to get long. Okay. Well, if that actually worked, then you're going to get long here, and everybody else is going to get long here, and it's going to have some sort of a measurable impact. Because if you say it's going to go up like yay far, right, then that means there's a limited number of contracts that can make money on that, right? And if there's already that number of contracts pushing it up, so then what happens is you kind of get this, and it goes, Joop, right? And then probably they sell it, and it comes back, right? So then you're going to do something like, well, I can't wait for it to cross the moving average. I've got to get into it before it crosses the moving average, right? So now I'm going to get in there before. And basically what happens, here you have the moving average, and then it would just do this. It wouldn't ever cross below it. Like, the entire setup basically gets arbitraged away. And everybody doing that for every kind of statistical inefficiency that they think they can find. And because the market is very responsive, like you think 4,000 contracts, that's a lot. But you can find 4,000 retail day traders trading ES easy. Like, just one influencer with a good live stream could easily equal more than 4,000 contracts in ES. Easily. With this whole ICT thing. So if you go and you look at ICT, there's like this one day where like his channel became really massively popular. And if you backtest his silver bullet strategy that kind of led to his popularity, it worked really, really well through like the whole COVID time period. And then basically to the day that live stream became really, or not live stream, but YouTube channel became very, very popular. Yeah, there's one ICT guy. ICT is a guy. He's been convicted for student loan fraud. You can go look at him. Tom Hiddleston, I think is his name, right? Yeah, it was one guy. It was one guy, and all of these other YouTube channels were just trying to explain what this one guy says. Because he's extremely narcissistic. Like, I feel when I'm talking about this stuff that I'm throwing too much information at you, right? Like, I am really condensing like 30 years of empirical data and stuffing it down your throat, right? Whereas this guy, he'll literally talk for hours about literally nothing. You get to the end of it and then you're like, okay, so wait, what actually was he saying to do? What? Anyways, to the day that became popular, ever after that, the strategy lost every time. It's crazy. So yeah, does their edge, but that's why the market is statistically efficient, right? It's very easy to wipe those out. Okay. But then when we go and we look at it from the perspective of informational inefficiency, right? Which is to say, does the current price reflect all available information? Could there be some things that you know, just that you read online, that's not accurately reflected in the current price? Well, if an index fund comes in, they're going to buy things. They have to rebalance their entire portfolio at the end of the month, right? They're trading literally hundreds of thousands of contracts. Like, the amount of money that those guys are trading when they're trading tens of billions of dollars is mind-blowing. How much volume that is relative to the liquidity. That's good. That moves it. Oh, it moves it, right? And it can move it very, very far away from like what would actually be considered fair value. So that's why the market is statistically efficient, but not informationally efficient. Yeah. Okay. But so for us, if I'm, my one little ES contract, that's probably not going to change too much, right? If there's a lot of other people looking at that same thing and it's this technical setup, then that could be a problem, right? The way that I think of it is I don't come in and say, here's this setup and it has a 52. That's another thing that drives me crazy is some of the things that some of the setups that people are looking at, they think, well, yeah, it only has a 53% edge or a 55% edge. Okay, like you realize if you take 100 trades, then your edge is only 6 trades. How comfortable do you actually feel trading that as a retail trader with one contract? You can maybe make that work if you're a big institution with low commissions and all of these sorts of things, but as a retail, you're never going to make the math work. You're never going to make the math work. So I don't look at it like that. What I do is I say, what are the forces that I have in the market that might be submitting orders today? So the big one that I'm watching is the auction. I haven't seen too many big icebergs yet, but we did get back to 14.5, so there's that. I would say, I don't think I would ever take this one, but we did get a meta order, right? I'm looking for this. Yeah. Good straight line in cumulative delta. That's a big player buying it out. That might have been, who knows why it was falling. I don't really know or understand that, but maybe this was somebody hedging for the auction that was like, okay, well, it's low. We can just buy this up. Cool. Right? And, but I'm trying to predict these, right? Like if I had gotten in here, which I don't actually see any of the things that I'm looking at. Hold on. Yeah, they kind of came short. Kind of came short of my mean reversion spots and stuff like that. So I don't think that there's any way I would have taken this trade. But if for some reason I had a reason to think that orders were imminent here, right? I'm taking it there's this big bar right here. Cool. Before it even really took off even, right? So I can get into it really early and just hold it, right? And I'm not thinking here's this setup and it has a certain probability. I'm thinking, I know what's going to happen. This big guy out there is going to buy, or this thing is going to happen and it's going to move price. And if you knew what I knew, you'd have to be stupid to try trading against me. That's how I think of it. I assume that I have this huge impact and everything that I do. If it just comes down to the stats and everything like that, it's not going to work and it doesn't come out. I have to have a real objective edge. I know something about what the flows are going to be. Right. And that's where I take my trading. And I base that off of the empirical data that we have. Now, does that, just because it's in line with our empirical understanding of the markets, doesn't mean that it's going to be a profitable strategy long term. Really, that's up to me because there's so much discretion involved in it, right? But I've done okay with it. I think you're better off trying to trade something that's in line with the empirical evidence than not, at the very least, right? Most you're gonna lose money trading anyways. I'm not trying to encourage anybody to day trade. Plus, on top of that, this all requires you to know what's going on in the market, read the headlines, understand markets and stuff. It's way more interesting than staring at a line, man. I just can't. These people that are pure technical traders and they want to trade all day and they're literally staring at a chart 6 hours a day. Y'all people are crazy. Crazy. That's so effing boring. And from everything that I know about the data, you're really actually just looking at a random line. It's funny, the thing that started this that I didn't even get into was ES, right? Okay, so if you have an informational edge, how do you do that in ES? I think getting an informational edge like that in ES is really, really hard. And so I really believe that most of what goes on over there from the perspective of day trading is just random. And the retail traders just don't have enough data or information to know that it doesn't really work. Informational edge on ES is probably all insider. Well, so you could definitely be like in Trump's cabinet and know that they're going to make a release and that sort of a thing. And there's all of this fuzziness around whether that's insider trading or not. But I'm not even talking about that sort of a thing. You know, what I'm kind of saying is like the sort of thing that you could know that might affect the flows in ES might not be big enough to really give you a high probability setup just because there's so much other noise over there. I found a move was set up before news is announced based off of technicals. Well, can you prove that empirically? Right, like, how could we do that? So one thing is you would say, okay, before news, do they fit certain technical qualifications before the news frequently? I would be very, very surprised if you were able to show that like 55% of the time it meets all of these technical qualifications. That's probably not right. Then you would say, oh, no. Like it's not like it does it most of the time, but like a lot of the time it does do it. Okay. So really what you're saying is there's a certain property. You think that happens more often than could be explained by randomness. So really what we would have to do then is we would have to say, okay, look at every time that it happens with news. Now, look at every time they do the same analysis on just a random time of the day. Just a perfectly random time of day. And what percentage of the time does it fit those technical qualifications at that random time of day? And then see if it happens more often at the news time than the random time. And then you could prove that it actually does tend to do that. Because it sounds suspiciously like you're trying to say that, like, the chart knows what's going to happen, sort of a thing. Which is another really ridiculous thing here, technical analysis, people say, but whatever. The additional volatility. Well, if you get in before the news, but then you better have the direction right. Ugh. As of late, so it actually has been an interesting thing that as of late, so you know what, this one's actually funny because this is one that I have the ability to backtest and have backtested before actually. Yeah, so I have an indicator. Oh, I don't even have it on here. Let's put it on here. Sometimes, so there's some maintenance that I have to do on the indicator, so it might not do what I want it to do here, but let's try it anyways. Come on. News, where is it? News warning. Okay. Oh, yes, it does do it. Okay, so you see those dotted lines? So I have this indicator that has all of the news for the year pre-marked, essentially, so I know when they're going to come, and you can put it on the chart. But what that means is when I'm back testing, I know every time that there's going to be significant news, and I can come in and I can say, okay, 1 minute before the news, look at the moving average, and then take a trade in line with the moving average and see what happens, right? So I've done that. I don't remember. So obviously it wasn't profitable, but I don't remember. There's always some interesting things about the stats for it, right? Like that when you win really big, but it's probably going to be something like when you lose a lot more than you win. Now, you could even just take it from a technical standpoint. How often does it go in line with the moving average? But I'm going to bet you that it's just random. But we could test that. Probably not right now because we only got 10 minutes left. But we could program that one. I usually just use the scout. Oh, man. So, like, if we come in and put a range histogram on this. Yes. 90 days. 5-minute bars, let's just say. 5-minute bars. Oops. Indicators. Speculator Seth. I have so many indicators, man. Holy crap. Range histogram. And I like to use area, value area of 0.5. This just changes how the colored area shows up. All right. So what is it saying? It's saying that like 99% of 5-minute bars are larger than 7 ticks. Okay, so if you're doing points, you're actually talking about 16. So you're sitting right here. Right? Depends on how long you want to hold it too. We could change this to say 30 minute. Right. Okay, well, when we get to 30-minute period, most of the bars are well above that, right? So, like, really, if you're holding for 30 minutes and you're right here, like, that's just noise, man. It's just noise. If you take it and you're making 4 points and you win or lose it, could just be random, dude. If you're holding them for 30 minutes and you're regularly getting above this line right here, then you're in money. Because what this line basically means is it's measuring the fat-tailedness of it, right? So what you can't see in this is that this is a log scale. These ones over here, there's way more of these than there are of these. And it follows the log scale. As you can see, because it's like a straight line once we put it into a log scale. So what that means is the value of all of these is equal to the value of all of these. Right? So, even if you were able to, okay, every time that we're having a bar like this, we're making money from it. And let's just say that I win 60% of the time. So I'm going to take 60% of the time, 60% of these where I win. Okay? Well, in order for that to work, you have to avoid all of these. Right? It won't take very many of these to completely destroy that. Right? You're just trading noise. So really what you have to ask yourself is this. Why do I believe that it works? So we don't have somebody that can show us a 5-year track record of trading it. We can't find any empirical evidence about the market that suggests that the things that it sees or behaviors that the trading strategy is based off of are real proven behaviors of it. So why would we think that that works relative to any other trading strategy that's available? It just doesn't make sense. Like, you know, I'm a man of faith, but I think that leave faith for your salvation and not your pocketbook. But do you see what I'm saying? Like, if your targets are well within just the natural noise oscillation of the charts, then how can you really be confident that you're picking up on any kind of real signal in there? So, like, a really good way to test this sort of thing empirically is, like, say, here's a signal, and then I'm going to take a trade from that signal, and I'm going to hold it for 30 minutes. And then you find out how much does it MAE versus MFE when I'm in. And you can compare those stats to a random trade, right? If there's something to it where your signal generates more MFE than the randomness does, like significantly more, then maybe you actually have something, right? Well, you need to do it at least over 5 years. That's how much data. Here's another way of putting it. Did you know if you come in, oh my gosh, my voice is going. It's time to end here soon. I'll leave you with this one. If you people have 1,000 traders and you have all of them just take a random trade every day, like it's just straight up random number generator, tells you the time and the direction to go, and you take a trade every day. Okay? It's completely random. At the end of 1 year, 40% of those traders will be profitable. The end of 1 year, 40%. You see why you need more data than that? When you get down to like 5 years, it's only like 10%. Big difference, right? And even there, that's still 100 people that literally just got lucky, right? You're right. It is lower than 40% in retail trading. Isn't that interesting? What do you think that tells you? I'm interested. Why do you think? So I've seen some that are as high as 40% actually, but I've seen some as low as like 5%. Like we're talking about the number profitable, right? So between 5 and 40%. So why is it that the actual performance of retail traders is so low relative to randomness? But I can tell you one is that when I'm doing that test and it comes out with 40%, that's literally telling it to hold it for like 30 minutes or an hour or whatever. So you're taking a random trade, a random time, but you hold it for an hour. So you're only exposing yourself to an hour's worth of volatility. The amount of volatility that you're going to get in that period is going to be enough that like the spread is going to be trivial, right? So I think that we could say that 5 to 10% of that, those guys get destroyed by the spread. They're trading too much and their trades aren't big enough, and so they just get eaten up by commissions. Okay. But that still only puts us at 30%. Like only 5% of traders win. We're theorizing that 30% should be able to be profitable just from randomness. Why is that? Human nature tells us to take any profit we can get and hold on to hope when something moves against taking profits too early and holding losers too long. Okay. What if, theoretical, we had 1,000 people submit robots to a trading contest to scalp, and the win rate of those robots through the test was less than 30%. What would you say then? So now we don't have human emotions involved. I can tell you something, like the win rate of algorithmic traders is not better than the win rate of retail traders. It's not. The most algorithmic traders never actually get to the point where they're actually like putting money on the line, right? But the vast majority of those strategies, they don't work. So why is that? Even when there's no emotions involved, most retail traders lose. Why? Let's stay for another. By algorithmic trading, I just mean anybody using a program to try and submit orders and make money. Like, I'm just basing this off of, if I go to the r/algorithmic trading and look, like, less than 30% of those guys, despite their best efforts, have found a profitable strategy. Right. Wow, we've never done a study. That's why I said it was hypothetical. I'm kind of basing this off of stuff that I've seen, but I'm saying just hypothetical, right? If we had a contest and only 30% of the robots made any money, they are not, like, there's not some psychology thing going on there. Why is the win rate so low in that situation? What would be the best explanation for it? Oh, I don't think that there is an answer. It's a hypothetical situation, right? So I'm trying to see what you think would be the possible causes. I know what I think would be the possible cause, but it's open-ended. It's more a test of how do you think about things. Or what path does your mind tend to go down? If we take all of the emotion out of it and the algos still fail, how do you explain that? Their algos perform worse than randomness. How do you explain that? I'd say the people making the algos aren't being made by smart people. I mean, I would say it'd have to be that the algos are bad, right? Like, not just that the algos are just random. Like, if all of the algos were taking random trading, then based on the information that we have, we should get 40% of them can win, because I can make something that literally is taking random trades, and if you do 1,000 of them, 40% of them will come out winners. So if we're getting less than 40% or less than 30%, then that has to mean that what those algos are doing is straight up negative edge. Well, you say they're not being made by smart people. You know what? I've seen lots of smart people fail at this. Right? But, you know, you have them trade for a year or whatever. Less than 30% are profitable. That has to mean that what they're doing is straight up a negative edge. Right. If you had a bad algo and a kind of good way because you can take the inverse, I wish it was that way. I've never been, even when I've found algos that like straight up perform badly, or inversing them still doesn't win. I would think theoretically there should be a situation where you can't see that, but because the way that I see it is this: market is statistically efficient. Should be extremely difficult to find a statistical inefficiency that will give you a strong, consistent setup with technical analysis. Given an efficient, statistically efficient market, anybody trading with, you know, technical analysis, the chances of them making money from it should be random, which is to say after a year, 40%. But because it's lower than that, that means that most of what retail traders are doing is straight up negative edge, right? There's all of these things that retail traders think or believe about the market that they think they know that are just objectively hurt them. You know, you talk about like the like where it depends on where their stop is and things like that. Well, you know, you can trade with these things that automatically put your take profit and stops and everything, right? And then you just don't touch them. That should take the emotions out of it, right? But what I found in my back testing is that whatever your setup is, adding a stop to it makes the performance worse. It's this bizarre, it's a well-known, I don't know if I've ever seen any research about like why this is and that sort of thing, but it's just kind of a thing known among algorithmic traders that the wider your stop is, the more money you'll tend to make. Right? So the more risk you're taking on, the more potential profits there are. You know? A lot of it is shorting double tops and longing double okay. I can backtest that. I've actually backtested that one too. There's a lot of nuance in how you backtest that, but so when I was testing those kinds of price action setups that were based specifically on, you know, finding a point at which you determine that there's been a double top, double bottom, or higher lower high or higher lower, you know, all of the different combinations of those things. And what I found in my study from that was that the price movement after a signal like that was more volatile and random than if I were to picked a random spot. So it essentially, by trading in those locations, you're basically making yourself prey. That there must be algorithms and stuff that they intentionally play around in those areas to stop people out. Anyways, that's what I found when I backtested those. It's kind of weird. But it's basically like the MFE, MAE that you would get after that were higher than a random spot. So. You need an exhaustive push before the double. Well, we could test that. You could say, you look at the moving average before, and then to determine whether it was exhaustive, we could use something like CCI, how high it is on CCI, or we could use R squared. R squared would say like how long and consistent of a trend it has been, right? And then you could set some conditionals, like only take it when it's over this number. I'm probably not going to get a different result. Anyways, my voice is going. I'm going to get going. I will see you guys. I don't think I will see you guys tomorrow, because tomorrow's Thanksgiving, huh? So not tomorrow, but Friday. We'll see you Friday. And hopefully my voice is better by then. I'm mad that my mouth is a little dry, even though I've been drinking a lot of water, but I'm kind of mad that it hasn't cleared up more. Maybe I'll take another nap. Probably I'll just play Stardew Valley all day. Like, I got this list of stuff to do. Am I gonna actually do it? We'll see. We'll see. Alright, guys. Stay excellent, team.